What's up, everybody? We're back with another episode of Bullish Chips, where we talk about chips and only chips. More specifically, how you can use a proven and repeatable strategy to make money every day by trading the triple leveraged Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. Make sure you hit the subscribe button and the notification button as well. We do release bonus content from time to time in between our nightly and weekend videos, so make sure you're notified when those drop. Make sure you follow us on X as well at Bullish Chips. Just a reminder, we're not financial advisors. We don't offer financial advice, but what we do offer is our view of the price action for SOXL, not only in the current day and in the past, but where we believe price action will take us in the future based off of our charting method and our trading method. If you are familiar with this channel, then it's nothing new to you. But if you're not familiar with this channel, make sure you check out our bonus content, and you can find out more detail about how we set up our precision trading levels and how we color code our charts in terms of broadening formations and major levels. Today's agenda for the weekend video, we're going to recap Friday's price action. We'll do a quick zoom out of and look at the wide angle view of SOXL's price action, because we are coming into not only a new week but a new month at the end of the third quarter. So we want to make sure we know where we're at from a wide and more long-term perspective. Make sure we're level set and not just zoned in on these small time frame charts, because the last 9 almost 10 weeks now have been sideways action, and we've been doing a lot of intraday trading. But we want to continue to maintain knowledge of where we are from a long-term perspective. We'll also look at the market maker's expected move for the coming week, and then we will go ahead and get to setting our 4-hour markers and triggers and targets for the day. Remember, we do have Monday off, so these triggers and targets will be for Tuesday, and then we'll look at the triggers and targets for the week and the month and the quarter and the year as well. So let's get into the chart, and just looking at an intraday chart for Friday's price action. It was there was some opportunity to make a little bit of money intraday, with the further push to the downside. But if you swung puts, you were really, the winners yesterday or Friday. The 3-2 up, 2 down was set up on the day, and we were at the top of the range, so it would be perfectly reasonable for anyone to be swinging puts, and it wouldn't be lucky, just making money off of that. There were signs that there could have been downward action with the price, and we talked about that on Friday. You can see clearly we have our levels marked out to, for targets if it were to trigger to the downside. So just looking at the intraday, we can see the market maker's expected move and the week flip were basically the same level, this 27.35 area basically. That coincided with the overnight low of 27.25. You can see obviously we gapped down. The previous low day was here up at 27.96, and we fell back below that elusive year flip that we've been trying to stay above. The 28.13 level has been resistance for the last 6-7 weeks. So not able to stay above it. So once again, when we drop back below, that puts our time frame continuity in contention, and so we did have the downward push, gap down with the further push, and this is one of the reasons why we have our 4-hour levels for intraday trading. But when you have such a gap down like this and you're past the 4-hour marker levels, this is where our major levels come in, and there's a reason why we have levels for the 50% lines of the previous month here in the green and the previous week here in the red. So the 50% of last week's move was 25.99. 50% of last month's move was 26.11. Last quarter's high was 25.84, and so all of these basically lined up at basically the same level, and formed a big support, at least for the day, right? And we talked about that in previous videos. We talked about that on X real time during the day on Fridays, looking for this level to be a support. And we actually did take a kind of a gamble call with the bounce off of this, with the initial bounce off of this level. Ended out just stopping out flat, which no big deal. No money won, no money lost, no harm, no foul. But it did. Price action just basically went along this level for the rest of the day, right? Internals were neutral to negative on the day. If we just look at, we'll take a look at those internals when we look at the week view here in a minute. But you can see there was this initial push down after the open. You got the confirmation of the lower high on the 15, and actually I don't even think it was on the 15, just on the 5 minute, and the further continued just grind down and sideways. So not a whole lot going on Friday unless you swung puts. It didn't really, didn't hammer up on the day perspective, right? If we go ahead and let's look at the day, let's get a chart that's a little less hectic. There we go. If we look at the day, right, like price action opened here, pushed down, and then it never pushed back up to give us like a hammer candle or any type of indicator that we could have upward movement on Tuesday when we open. We closed below the open. We closed below. Let's just go back to our. It's just a little, but we closed, right at the 50% of last month and last week high of last quarter. So there is the possibility to get that support in the push higher, not based off of the candle structure, but just based off of location. But if we're looking at candle structure, we looks like we could continue to test this level, if not, at least push down below before popping back up or whatever. But this is basically the midline of the 9-week range we've been in anyway, right? The 28 to 24 range. A couple weeks previous, it did get stretched to 30 and 350. So we thought we might get that further push up on Friday when we were talking Thursday night to this higher 30 area where it had kind of expanded to, but instead we got the push back down. We'll see if we get the push back down to just the 2438 level, or if it wants to go to the expanded range that it made in the previous weeks down here around 2350. But that's, will remain to be seen. We have a long weekend. There's a lot of time before the market opens back up on Tuesday. So that's just starting to look at things from a little wider perspective on the day. Let's see. On the day, we did push down. Again, we're at the middle of that range that we've been in here for 9, almost 10 weeks now, right? Just moving sideways. You can buy puts at the top of the range. You can buy calls at the bottom of the range. And as long as you've got time on your contract, you can just wait till you get to the other end and sell. So once you see the reversal signal as well, obviously, right? If you don't get a reversal signal, then you just continue to ride it up like we did here at the top of the range 2 weeks ago, where we pushed up for a couple of days above the top of the range, expanding it to that 30 area before pulling back down. Looking at it from a week perspective, let's go at this. Here we go. So we did get the 2 up on the week, giving us a higher low on the week. And then as I'm saying these numbers, I'm kind of reminded that not everybody is uses the strat to trade. It's a trading methodology, charting methodology that was invented by Rob Smith. I've got a link to a free PDF in the description to this video if you want to dive into it deeper. It's very simple to learn. There's only 3 things a candle can do, be a 1, a 2, or a 3, and there's 6 main reversal patterns that can be formed off of that we like to trade. You can trade continuation patterns, right? They give you a very clear entry, but you have to use your judgment of price action and other things like major horizontal levels or broadening formations to determine where you want to get out, as opposed to a reversal where you have a very clear entry and a very clear target, a very clear entry, very clear exit. So hang with us through the video if you're not familiar with it. By the end of the video, you should have a pretty good hang of it. And even if you don't understand the numbering concepts, it's just a way of looking at price action. So you can get a good feel for that just based off of this video. So if you want also as well as that PDF that's in the description, if you look in our bonus content, the videos about how we set up our charts go into more detail about this as well. There's a big strat community out there, so there's plenty of information about the strat and Rob Smith. He's no longer with us, but plenty of information out there on the internet about it. So plenty of reason to go do your own research on it if you're curious. Anyways, looking back at the week chart, we did get the higher low here with the 2 up, right? But we did not reach magnitude. So we don't have a higher high or an equal high. We've got a lower high so far. So seeing that we closed at the bottom of the week candle on Friday, there is a high possibility that we do open next week and immediately go 2 down. locking in a lower high. So if we've got a higher low and a lower high, then obviously it's just more sideways action. It's just consolidating, kind of coiling up to make its next move, which is fine, right? If we kind of tighten things up here, we've got kind of a bull flag going on. Here's the pole, here's the flag. So we could expect another move, maybe fourth quarter up, fill this gap up to the 40, around the 40 area. We do have to remember that seasonality is going to come into play here. September, October are the worst performing months for tech. So we want to keep that in mind. Another reason that there's a full, it's very reasonable to expect more downside action. It isn't going to be a new month on Tuesday, so we have taken the month flip off of the chart. So right now, only the quarter flip and the year flip are up there, right? The quarter flip's red at 24.38. The year flip's green at 28.13. If we take a look up at the upper left-hand part of our chart here, we've got our time frame continuity where we've got the week, the month, the quarter, and the year, and we can see that the last week closed red and the year closed red, or is red right now as well. So we've got conflicting time frames as far as what's green, what's red, which is just more of an indication of sideways action. It looks like we were defeating this monthly downtrend line that we've got here, this green dash line, but we're kind of getting sucked back to it. This resistance of the year flip, 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, 7 weeks now. It's very evident that this is, resistance, and you can see the overhead supply here, and where it was resistance support in the past. So you can see that it's going to be, a hard fought level, and right now neither side's winning, right? We're just going sideways. But we do want to continue to see upside action for the bulls. Bears, there's plenty of, quote unquote food out there on the table. We've got gaps to the downside. We've got what could be a lower high. And so the longer you move sideways, the more exhausted the bulls can get a lot of times. And that's when bears can get a little bit more action. Maybe we don't get a full drop down to this gap or something, but maybe we just get this gap closed and threaten going back under the monthly downtrend line. Who knows? But we'll see with the next week. We've got the long weekend. We're coming up to a new month, so let's just take a look at things from a monthly perspective. We did have a green 3 or a bullish engulfing candle last month, but price action definitely pulled way back in last month's price action. So we're not in force, right? And if we were in force, then price action, our current price right now would be above all of last month's price action, but we're back basically in the middle of the 3 candle as well. So just another indication of indecision, right? We did go to the downside initially this past month, and then we went to the upside, and then we're back in the middle. So indecision right at this major support resistance level. So again, fully expected, and we just want to continue to watch the intraday. From the quarter, nothing much has changed other than the fact that we're getting closer to no longer being in force on the 2 down, 2 up, right? With the 2 down, with the 2 up triggering, that gives us a target of the high of the candle to the left of this 2 down. So that high of 36.15 is where we're trying to get this quarter. Again, you don't always reach it in one quarter. It may take multiple quarters. You have the combined 2 up, right? 2 up and then another 2 up to make a combined greater 2 candle, right? To reach this high. But again, that's remained to be seen. We don't know what could happen with this quarter. We could end up with a failed 2 up, actually, right? If September, October are bad and we pull back down and the quarter flips red and we end up like an inverted hammer here, definitely not a bullish indicator going into the fourth quarter. We just have to take it how it comes. I'm not in the business of predicting. I'm just showing you what could happen, and we'll be ready for it. We have our triggers and targets. If it does go to the downside, nothing to fret about. We sell calls, we buy puts. You wait till we get to lower levels. You can buy shares. It's just opportunity, just more opportunity. So that's really all we've got from a wide view perspective. I mean, we can look at the year. We did do the trigger the 1, 2 up, 2 down. So we do have to still keep in mind it did not reach its magnitude. We got to the 723, but not the 621. Here's the 1, here's the 2 up, here's the 2 down. When you have a 1, 2 up, 2 down, the target or the magnitude is the low of the candle to the left of the 1. So that's this candle, which the low is 621. Again, in April, we got down to that 723, but there's still room to go down, and the year is red. So, if momentum gets picked up by the bears going to the downside in these next 2 quarters, you never know what could happen. They say it's a stairs up, elevator down. So the movements to the downside are a lot quicker. Who knows? We may go fill a couple of these gaps and, threaten trying to go reach this magnitude. I don't know if we would actually reach it again. I think a lot would have to happen, but we'll see. Let's get back in here and we'll just take a quick look at actually the internals for QQQ for the week. Right on the upper left hand part of the chart, we've got SOXL's price action on a 15-minute time frame. On the right, we've got the tick Q, upper right, tick Q on 15-minute, lower right, ADQD. Tick Q and ADQD are just measures of breadth, not the whole SPY, but QQQ in this because we have the Q added in here and the ADQD added in there. Those are just looking at the stocks in QQQ, not the market as a whole. And then at the bottom left, we have vol QD, which is basically money flowing in versus money flowing out in QQQ. So we can see Monday, we had some pretty muted action with a little push to the downside. That was reflected in, vol QD. Breadth was down, all day. So that's reflected there as well. But you can see how the internals reflect the price movement that we've had throughout the week. So if you're not familiar with the internals, take a look at these tickers and do a little bit of research on them. It's not something you want to just base your whole trading off of, but it's another tool in your tool chest to further confirm what you might be seeing on the charts as far as price action is concerned. So just showing the correlation here, just giving a little bit of extra information, something that you can use. Let's go ahead and get back to the charts. We've done our wide view, and what we'll do now is take a look at the market maker's expected move for this coming week, right? And to do that, we want to go to the options chain this is Thinkorswim. And if we look at the options chain for the week of September 5th, that's this coming week, we can see over here to the right, there's a market maker's expected move of plus or minus $2.21. So with the close being 26.04, we can expect price should be somewhere in between 28.25 and 23.80. So we've gone ahead and put that in our notes here. These are the notes for Tuesday. Obviously, today is the 30th. On Tuesday, there will be 82 trading days left in 2025. And on Friday, we had a close price of 26.04. The week, we don't have an opening print for the week yet because it has not opened. We don't have an opening print for September yet either because that will be on Monday. But we do know that the quarter turns red at 24.38 and the year turns green at 28.13. So we just want to make sure that we go over those, have those in our mind. The expected market maker's expected move for the week, once again, is that $2.21, giving us a 28.25 to 23.83 range. So I think we marked that on our, if we take a look here at, let's just pull up a 4-hour, we can see we've marked on our chart here 28.25 as our market maker's expected high. Oops, why is that marked low? Let's make that high. So we've got our market maker's expected move high at 28.25 and market maker's expected move low here at 23.83. So you can see it's not a huge range, but there's enough definitely to make money. If we take a look back at last week's, the expected move was up here at 29.97 and the low at 24.93. You can see last week, Monday, so we start here, is this? Yeah, this is Monday. So you can see the price action did kind of go up, we got up to 29, so we had another dollar basically to the upside. and then to the downside, we got pretty close as well. But the price action did stay within the market maker's expected move. So that is, something you want to take note of. But I do also want to make note of the fact that the market maker's expected move is not always right. If we take a look at Friday's expected move, we have the market maker's expected move high up here at 29.66, and the market maker's expected move low here at 27.37, and that's actually where we opened up. So just another reason why you want to have our major levels like the 50% of the previous month, previous week, and the quarters. You can see here we've got the high of last month, the 50% of last month, and the low of last month here. So they're all in. You see how the low of last month coincides with the gap open, and it's just another reason why we want to have these levels on. And again, if you're not familiar with those levels, look at our bonus content at our how we set up our charts. Let's get back into our look for the week. So we have our expected move marked on the chart. We've got our year flips and our quarter flip, right? Last year's low is here at this 23.50. So we do, end up re-triggering the 1, 2 up, 2 down if we go below the 23.50, right? And so that's how we can possibly find momentum moving further back down to the downside. But for the day coming up, we'll go ahead and set our triggers and targets for Tuesday, and then as well as the triggers and targets for Wednesday. For the week as well as for the month. Here we go. Yeah, let's get our scalp chart up. And if we look at the 4-hour, let's make this a little bigger. Second 4-hour candle of Friday was not that big, so we'll make it a little bit larger here on the chart. We can see we've got a hourly downtrend line going here and an hourly broadening formation here, right? So we can see that at least from the hourly perspective, there is more expected downside movement, which also is fine because we've got a 4-hour broadening formation down here and a 4-hour broadening formation up here. So there's plenty of room to still continue to come down. Even on the 4-hour perspective, we went below this soft higher low. And I forgot we did go below the lower low here. So we did make a bigger broadening formation from the 4-hour perspective. Let me just go ahead and change that. Actually, let's edit and make this gray. So we have our 4-hour broadening formation here, and there's nothing saying that we have to bounce off the broadening formation. You can always ride a broadening formation down, just like we did on the week. Right, you can see how for days we just rode the broadening formation. So this would just give us a guide as to where price could continue to go. Now it could just break through the broadening formation and retest last quarter's flip or this quarter's flip, because it also does coincide with this weekly uptrend line that we've got going here, this purple dash line. So the 4-hour broadening, we'd like it to hold if you're a bull. It coincides with this quarter, the last quarter's high, so should be some good support. But if it does break through, we've got a little bit more support here, and it would give us a lower low on the week perspective as well, and set in a start a downtrend. Right? If we look at that, we've got this will be a lower high, and then if we break below this, this level here, try and fill this gap, that gives us a lower low, and that starts us with a downtrend from the week perspective. But we should see that from a day perspective, 4-hour perspective first. Just setting our triggers and targets here. I know I keep kind of venturing away from that, but let's set our triggers and targets for the starting with the 4-hour. If we do go to the downside, that's a 2 down, 2 down continuation. So we have a very clear trigger, which is the low of this second 4-hour candle of Friday, and that is 25.67. But we've got to use our judgment on price as to where our exits would be, just because we don't have a flip, right, or a reversal. This is a strat continuation. So reversals have targets, continuations have entries, and then you have to make your own targets. We can see this level around here is a good level of support and resistance. Just looking to the left at the previous price action of this last 9-week range that we've been in. So this is the major, basically halfway line, but we've got a little bit of support here. Kind of, if we can just draw a Fibonacci, that'll make it easier to visualize. If we just look at this latest move, you can see right here, there's this 2483 level. There's a level of support. So for our triggers to the downside, we've got 2567, and then we've got targets at 2534 and 2495. Knowing where our lower lows would be to make an even bigger broadening formation. Now to the upside, we would have a 2 down, 2 up, which is a reversal, and that gives us a very clear entry, very clear exit, but we do have some, very clear entry, right, of trigger, and a magnitude, which is a very clear exit. But because the gap is, big enough, and because we're in an hourly downtrend right now, we want to make sure we have a couple of targets in between where the magnitude would be, just in case we do go just set a lower high or something like that. We've got those levels kind of marked out. And I guess we could just bring out that fib again. Let's go from here. This was the Jackson Hole push up. So we can see to the upside, we've got 2678. Actually, I think we made it from the bottom of here when we did this is our targets here. We've got the 2639. We just went with the whole movement, right? That's what we measured before. This 2639, 2703, and then finally this the magnitude of the reversal, right? The entry would be here, the magnitude up here at 2735. So we've got our 2611, our targets of 2639 and 2703. Those are if we're going to make a lower high. And then if we're going to actually reach magnitude, that's that 2735. Okay. So the triggers and targets for the 4 hour normally roll into the day. And we see that here where the trigger for the day is also the trigger for, the trigger for the 4 hour is also the trigger out to the downside on the day. If we go ahead and, let's get rid of this Fibonacci. Let's switch to the day chart. We can see that we would have a 2 down, 2 down continuation. Let's bring in, there we go. 2 down, 2 down, right? And triggering here, we can set our first target here because this is a sign of price action. Price action did stop here at one point. So we've got the low of this candle is 2491. And then we've got the low of this candle here for further price action. Actually, the quarter flip is going to be our first support after this candle. And then the low of this candle here is going to be our last support. So you can see to the downside, we've got our trigger of 2567. And we've got our targets of 2534, 2495, and 2438. Right? To the upside, again, this would trigger a reversal. And whenever you have a reversal on the 4 hour, like the 2 down, 2 up, the magnitude of that reversal is the trigger. The magnitude of that reversal is the trigger for the day. So the magnitude is 2735. That's the trigger for the day. That would trigger the 2 down, 2 up. This should be a down. So 2 down, 2 up. Again, it would be a pretty large move within the hourly downtrend as well as the resistance that we have above in last week's 50% and the year flip. So we do want, in between this trigger here and the target up here, we do want some targets just in case we're just making a lower high on the day. And so we have those targets here. We trigger at 2735, targeting 2794, 2813. And then up here we've got the magnitude, which will be 2911. I did not fill that in. 2911 is our magnitude, right? And that would also give us a higher high on the day. So we've got our trigger for the reversal and the magnitude of the reversal, but in case we're setting any lower highs, we've got targets in between, and those are the triggers and targets to the upside. So very, very clear entries and exits. Again, working within this range, this $24 to $28 range that we've been in for 9 weeks, and with the little bit of expanded margin here to this 23.50 and this 29.11, almost 30 level. So just got to continue to work with that, keep our eyes open, and hopefully the new month will give us something. At the very least, even if it's to the downside, if we open the month around here and we push to the downside and we go below the quarter, at that point we've got full time frame continuity to the downside, right? The year would be red, the month would be red, the quarter would be red, the week would be red, obviously, and then that's momentum for bears. So that's where we start looking for our lower targets down here. just looking at it from a week perspective, switch to the week. Actually, let's bring out this one just so we have our markers of where the month, last month's 50% and last quarter's high are, because they are still kind of in play, right? If we trigger to the downside on the week, that gives us a 2 up, 2 down. Really, it's a failed 2 up because it ended up red when it started out green. So that gives us a very clear entry at the low of last week, right? This 25.67, and a very clear exit of the low of the previous week, which is 23.66. So we've got 25.67, magnitude of 23.66. We've also got our extended targets here, 22.57, 21.98, and 21.18. And you can see where those come into play, right? The 25.57 is last month's low. It's also the top of the gap on the day perspective. And we've got a couple levels right here in between for on the way down. Now, we could, like I said, continue to push down. It's an elevator down. That would be a pretty big move for the week, though, right? So we want to keep everything kind of tempered. This, even getting to close of the gap, would be a big move, right? That's 26 to 22. That's $4. You can see here how just $2.50 was almost a 10% move. So that'd be basically like a 20% move if we close the gap on the underlying ETF. So, it does have, the underlying ETF does have a high beta. Anywhere you're doing your research, it's between 4 and 5 on SOXL. So we could get that movement, but not a high percentage chance, right? There's still plenty of support down here to help try and keep from dropping too far. We'll have to work through those just to even close the gap. So on the week perspective, those are our triggers and targets to the downside, right? Very clear. Triggers and targets to the upside. The trigger would be the high of this past week, and this past week did trigger a 2 down, 2 up. It had not reached its magnitude, so we could trigger, if we go above last week's high, that would trigger the 2 down combo 2 up. Again, targeting the high of this candle to the left of the 2 down being the 29.66. So we do have the 29.66, and then for our extended targets, the 30.55. If you're familiar with our channel, this is going to be ingrained into your brain. I'm going to go ahead and bring it up again. But if we look at the price action for SOXL, starting at the 2020 low, we know what happened in 2020, to the all-time high, and we dropped our Fibonacci levels. This 61.8, if we look over to the right, is 30.55. And you can see how it's been major support and resistance through the movements of SOXL over the years. And so we definitely want to keep that in mind, right? So even looking at our triggers and targets for the week, yep, there we go. Looking at our triggers and targets for the week, we do have the magnitude of the 2 down combo 2 up, but we have our extended targets of the 30.55, 32.64, and 36.15. Those are higher highs on the week perspective. So those would widen this broadening formation that we're starting to form here, right? This would be the bottom. If we come back up here and breach this, we're obviously widening that. So we've got our extended targets for the month, the week, the year. Now we have the month that we need to set our triggers and targets for, because we are coming into a new month. So if we look at that, we've got a 3 on last month, or the bullish engulfing candle. So there's not going to be any reversals from a strat perspective, just continuations. We're either going to continue to the downside or continue to the upside. So giving us a 3, 2 down, triggering at the low of last month, which is 22.57. We do have some targets to the downside of 21.09, 18.44, and 16.53. We just do those, right? So if you look, we've got plenty of levels that we can stop at through this, what appears to be thin structure from a monthly perspective, right? That we didn't have, we had just that push up and not a lot of in between. So we've got a little bit of that we can still fill up and retrace. But again, we're coming into the seasonality where September, October are weak for tech. It's perfectly reasonable to expect some type of pullback. Again, this monthly downtrend line that we've been dealing with, it could come back into play. We thought we had it beat, but we could end up right back below it, and then that turns into another point of resistance on our push back up when we do try and push back up. So we've got our triggers and targets for the month. 2257 to the downside, targeting 2109, 1844, 1653. If it triggers to the upside at 2966, we've got our 3055. Once again, that 61.8 fib of the 2020 low to all-time high. And then extended targets of 3141, 3264. We are still in force on the quarter with the 2 down, 2 up. All right, it triggered at 2584. We're still just barely in force. And we have not reached magnitude. So that's where, this 3615 comes into play. That's the magnitude for the 2 down, 2 up on the month. And then if we were to reach that, we've got our extended targets here as well. And then, of course, for the year, we did trigger the 1, 2 up, 2 down. Again, underlying showing that it was triggered, but not bold like the quarter. Bold would mean we're in force, so it's not in force. But it's still somewhat of a threat because we did not reach magnitude. So those are our triggers and targets, not only for the 4-hour and day on Tuesday, but for the full week next week, this coming month, the rest of this quarter, and the rest of this year. So I'll leave these up here for everybody to kind of take a look. I won't leave it up too long because you can always hit rewind. But I hope everybody liked today's video. I tried to keep it somewhat short. I know the weekend videos can be long sometimes. I like to give as much information as I can, but I don't want to be overloading. And I know that not everybody has time to spend 45 minutes to an hour watching a video on just one ticker. So the good thing is the strategy that we use is not just for this one ticker. You can use the strat and the methods that I've talked about in this video for any underlying ticker symbol. So take this strategy. Definitely use it for SOXL. The reason why we have this channel dedicated to SOXL is because of the benefits it provides, especially from an options perspective, right? The underlying stock has a very high beta. The premium is quite low for what you're getting in terms of delta to theta ratio. You get a very high delta to a very low theta. And for that combination of high beta, low entry point with a high possible outcome, profit outcome, it's just something that I would like to spread the word about. I want to just make sure that I spread the word about the strat as well. Over the years, it has been very good to me, and the community has been very good to me. Right? It's not a new trading or charting methodology. It's been out for years and years, and it's proven and it's repeatable again for any ticker symbol. So I hope this video has been enjoyable for everyone in those perspectives, and I hope everybody has a good idea of the triggers and targets for this coming day and week, and moving forward, what we can expect. Again, we don't make predictions of where price is going to go. We just respond, right? We don't react, because react implies you're not thinking, you're just doing. But responding implies that you have to put some type of thought into it, and this is the thought that we put into it, right? You do the work beforehand. That way, when price action starts up again on Tuesday, you don't have to think about a whole lot. We know our levels. We've gone over them. We know what we want to do when price reaches particular levels, in particular ways, right? If we're making higher highs above the opening print, we want to be in calls. If we're making lower lows below opening print, we want to be in puts. Even if we're below opening print, if we're getting a bounce off of a major level, sometimes it may be worth the risk to go ahead and dip your toe into a couple of entries for early, to see if that is going to be the bounce point off of your major level, and then you can scale in as you go. However you want to work your methodology off of the charts and what the charts are giving you is up to you, but I hope that the strat has been a good way for you to find how price action is moving very easily. So again, those are our triggers and targets. If you like the video, give it a thumbs up. Maybe share it with somebody if you think it's beneficial. We're not selling anything on this channel. It's everything we're trying to provide for free. So, give us a thumbs up, and make sure you're subscribed, and so that when we release our videos. We do release videos every night throughout the week, and then once on the weekend. But like we said, we do have bonus content. So we do want you to be aware of that stuff. All right, well, I hope everybody has a great rest of their weekend. I tried to get this video out a little early. We do have the long weekend, so just remember that, no trading Monday. Get yourself some good rest. Spend some time with family if you can, if that's what you desire. Just spend some time alone, maybe just working on yourself. But take this time to enjoy yourself and try to make the best of life. And I wish everyone the best of luck of trading on Tuesday. Follow us on X. We do tweet throughout the day, so keep up with us and our trades throughout the day through X.